Senate Committee on Banking, Housing, and Urban Affairs will come to order. Welcome to the witnesses and committee members. We know that most Americans want the same things: a safe, affordable place to call home, a good-paying job, a strong, stable government which they can trust. Our democratic institutions are only as strong as the people who empower them. Our economy works best when we have a free and fair democracy in which everyone can live lives with dignity. For too long, many of these dreams have fell out of reach. Working families struggle to pay for groceries, to keep gas in their car, to keep a roof over their heads. The cost of living and raising kids continues to rise. Democrats are listening and have delivered for the American people. We've passed legislation to lower prescription drug costs. We helped families stay in their homes during the height of the pandemic. We made investments in public transit and our nation's infrastructure. For the first time in generations, we focused on communities that our governments turned their back on, especially, for instance, in my state, the state government. Now we're tackling inflation by taking on corporate power and consolidation and reducing our dependence on foreign oil. We do that while creating good-paying manufacturing jobs at home. These jobs, making semiconductors, electric vehicles, solar panels, are the jobs of the future. These jobs will go to Americans because we passed the CHIPS Act, the Inflation Reduction Act, and the bipartisan infrastructure law with strong Buy America provisions that Senator Portman and I worked on. And we see results. Our economic recovery has been strong. Over the past 2 years, many Americans have built up more in savings. We've seen robust job growth. For the first time in decades, we've seen wage gains. Just last week, we began to see signs that inflation is starting to cool. Banks and credit unions are doing well thanks for the protections we put in place in Dodd-Frank and because of the support that Congress and regulators provided during the pandemic. Too many big corporations, though, have taken advantage of market concentration, jacking up consumer prices, earning higher and higher profits. As my colleague Senator Reid has pointed out, the biggest banks that benefit from higher interest rates today are not passing on those benefits to their customers, again penalizing Americans who are trying to build up savings. Workers and small businesses already struggling under the weight of inflation shouldn't get hit with exorbitant bank fees, shouldn't lose their money on a crypto scam, shouldn't have to worry that their savings will disappear overnight if a mismanaged bank or credit union fails. None of us want a scenario where risky bets on Wall Street crash the economy again. That's why it's so important we have financial watchdogs like the four of you, empowered to look out for Main Street, helping more Americans hold on to hard-earned money at a time when they need it most. Banking and credit union regulators are independent agencies that protect consumers, make sure banks and credit unions are safe and strong. Their independence, your independence, matters. It makes for a more stable financial system. It's essential for the entire economy. Our witnesses today all have decades of banking and credit union regulatory experience. They spent careers serving the public and protecting consumers, making sure our banking and credit union system works for Main Street, not just for Wall Street. That's exactly what they continue to do today. They're modernizing and strengthening an important civil rights law that will spur new investment in neighborhoods and communities that have been left on their own. Thank you for that. They've taken a closer look at overdraft, non-sufficient funds, and other gotcha fees at banks and credit unions to make sure customers are treated fairly and that these fee programs don't raise safety and soundness concerns. Thank you for that. They're taking a fresh look at the bank merger approval process so we don't continue this rubber stamp consolidation, which has big consequences for local communities. Too often big banks merge and close branches, leaving rural towns and urban communities without a bank. They're revisiting the financial system's safeguards that protect us from risks at big foreign banks, making sure bank failures don't leave taxpayers holding the bag. It's important to remember the super regional banks of today are hundreds of billions of dollars larger than the largest banks that failed during the financial crisis. Our financial regulators know we need strong capital requirements so banks and credit unions can continue to lend and invest in communities in good times and bad. They're also overseeing the formation of new institutions that serve communities that often get left behind. Just last week, NCUA chartered a new faith-based credit union. FDIC recently approved the first mutual bank in 50 years, which will pave the way for more in Ohio and across the country. All the agencies are working together to foster new banks and credit unions and support the work of MDIs and CDFIs in their communities. At the same time, our regulators are looking out for risks on the horizon, the effects of climate change, the rise in crypto assets, the risks from shadow banks, the constant threat of cyber attacks. They're working with banking and credit union industry to prepare for climate-related risks and bolster cybersecurity protections as criminals become more sophisticated and geopolitical threats increase. They've stepped up to protect depositors and consumers when crypto firms mislead them into thinking their money is safe when it isn't. But we must stay vigilant and empower regulators with the tools to combat these growing risks. Data breaches at banks and credit unions happen too often, threatening customer data and exposing our financial system to vulnerability. That's why we need to pass the bipartisan Improving Cybersecurity of Credit Unions Act led by Senator Ossoff and Lummis and Warner. We need to make sure that banks and credit unions can partner with third parties in a way that allow banks to stay competitive without putting consumer money at risk. We can't let big tech companies and risky shadow banks play by different rules because of special loopholes. All these things will help strengthen our banking and credit union system for its core mission, serving Main Street and workers and families. When workers have more power in the economy, they find better paying jobs. We have a stronger labor market. That helps credit unions, which added over 5 million new members over the past year. It drives down the number of households without a bank account, which dropped to record lows in 2021. When government's on the side of working families, more Americans save money, more Americans build wealth, more Americans start small businesses, more Americans participate in our economy. Our financial regulators have answered that call. Thank you for that. I'll continue to work with them to make sure our banking and credit union system works for everyone. Before I conclude my remarks, I want to thank the witnesses again for being here, especially congratulate Marty Gruenberg on being nominated by President Biden to be chair of the FDIC. Marty's well-respected, seasoned regulator who's worked to protect consumers and preserve confidence in our banking system, played an instrumental role in helping implement many Dodd-Frank reforms. With his experienced leadership, I have no doubt that FDIC can continue to address risks in our financial system and increase access to affordable financial services and ensure that banks honor their commitment to communities through the CRA. This committee looks forward to holding a nominations hearing in the next few weeks for Marty and other FDIC nominees.